Okay, everybody, it's me, Gregory Mannarino. It is Sunday, May 3rd, 2020. This is my newest segment of Markets. I'll look ahead. So let's do that. Let's look ahead. But to look ahead, we got to look back. First, this is how it always works. Again, we just came off the best month for market gains regarding the stock market since 1987. An incredible run. As a matter of fact, I did a special report video yesterday, which I hope you have seen. If you have not, I would suggest closing this. Go watch the video I did yesterday and then come back and watch this. Because in that video, I went over a particular chart of the S&P 500. And if you happen to have seen that video first, it'll make more sense here. So again, best month for the stock market with regard to gains since 1987, despite tens of millions of people losing their jobs, despite a dead economy. There's nothing going on here. Now, generally over the weekend, and the reason why I like to do these videos on a Sunday is I like to gather information. There isn't really too much out here. And that could play out to be either a good thing or a bad thing for this market. I mean, it's early. Right now, it's 7:34 a.m. Pacific Standard Time. And of course, we could get some kind of market-moving news. But if you notice, generally on Sundays prior to U.S. stock futures opening, they tend to float out some kind of stock market positive news. Now, I'm not saying that's going to happen. I have no idea, but they tend to do it. We'll see if that happens today. Okay. Now, going back to these markets real quick so we know where to put our cash to work. For me and my Lions, if you've been getting my newsletter, there is a link in the description of this video. I sincerely believe we are in the right spots right now. I outlined at least my suggestion on how to play these positions. The speculative buys and the early buys, of course, we got to give them the time they need to work. Anyway, forget about that for a moment here. If we look at how the stock market is trending, it's trending higher, period. It's trending higher, period. Now, that does not mean, again, people, that this market can't sell off a little bit before we go up. If you look at the crossover in the chart that I showed you yesterday, I made it the 21-day moving average moving above the 50-day. That's bullish here, okay? Bullish doesn't mean it's a guarantee that it's going up, but look at the trend. The trend is always your friend when we're talking about these markets. And they're completely fake. They're completely rigged. And we know what the Fed is doing. The Fed is pumping and pumping and pumping whatever they can and then more. That's what they promise to do into this stock market. It's literally off the Richter scale, funneling cash around the world, giving trillions of dollars to other central banks around the world. The dark money balance sheet is ballooning. Okay, that's the one you're not allowed to see. The balance sheet you're allowed to see is ballooning as well. And as I explained to you, the larger these two balance sheets go, I mean, the stock market is going to tend to go up regardless of a dead economy, regardless of everything else that's going on here. The disconnection, again, between the economy, which is, we're not even in free fall, it's over, and the market is getting worse here as, again, the debt acquisition is para-freaking-bolic. Para-freaking-bolic. That's the way it is here. So what does it mean for other assets? Again, cryptocurrencies are on their way up. Bitcoin crossed 9,000 yesterday. It dropped a little bit here. Again, cryptocurrencies are very volatile, as is as is the derivative of silver, SLV. Gold is also volatile, but not nearly as much as silver. So you should expect this if you're a trader with regard to GLD, SLV, and you're saying, hey, why is silver doing this and gold doing that? Expect a lot of volatility with regard to the paper derivative of silver, which of course affects the hard asset price. Same thing here with cryptos. Volatile. Expect, especially Bitcoin, because it's like I said, it's almost $9,000 at this particular point. Expect large swings, okay? I wouldn't be surprised to see Bitcoin go 95, 9,600, drop 1,000. This is what you need to understand is going to happen with regard to certain assets, even the stock market lately. Prior to this rip-roaring April that we had, we were getting 900, 1,000 point swings daily in the stock market. So you got to expect volatility. When you get my newsletter and you get like a trade alert, you get an early buy alert or a speculative alert, I tell you, expect volatility. This is the game. You can't just say, okay, I'm going to invest X in XYZ, and it's just going to go up steady. Absolutely freaking not. If you expect that to happen, you're going to be very disappointed. It's going to do this. Random walk. That's the way the market works, period. The end. Okay, so markets are trending higher here, period. Unless something else comes out of left field, they're going up, okay? Not saying stocks aren't going to go down tomorrow or even the next day. The trend is up. Period. Cryptocurrencies, I can't stress this enough to you. Trend higher. Metals, good. Let them play every game they want to. We're going to play our game too. Acquire hard assets. Parabolic debt. It's a no-brainer. Anyone who doesn't get it at this point is completely lost. In a world of parabolic debt, you must, and freaking must be holding a hard asset here. And my favorite of all time, I'm going to say it again, is what? Exactly. Physical silver. That's Greg's favorite asset of all freaking time. We got that covered. Now, let's look at a couple of other things here. I know this is getting kind of long, this video. Crude oil. The world is awash in crude oil. Okay. We've seen what they've done to it lately. It's been catching a bid. Is it going higher here? Well, I would say we can expect extreme volatility with regard to crude oil. So if you are investing in crude oil or a crude oil ETF, expect extreme volatility for a while. I wouldn't be surprised to see crude oil go negative again. That's how extreme this can possibly get. But again, they play a game. They jawbone it higher. False flags are thrown in the face of this market. But understand, crude oil, the lifeblood of the military-industrial complex, the entire energy sector depends on it. The entire financial sector depends on it. So they'll probably manage to prop it up some lovely way. Now, let's back up yet again. The biggest monster here in the market. And this is the driver, people. You know what it is. What am I going to say? The debt market. Exactly. Everything I'm explaining to you, with regard to any freaking asset that you want to look at, depends on action in the debt market. And all I ask you to do is look at one thing and one thing only. It's the 10-year yield. Let's go back to Friday where the market sold off. Dow sold off 622 points. The 10-year yield remained relatively stable. It dropped a little bit. At one point we're at 0.64. Okay, we're at 0.612 or something like that. That's a drop. But it didn't drop into the fives, five handles. If that happens, let's say, for example, tomorrow, the market sells off and then we see that 10-year yield drop 0.59, 0.58, 0.57. That's a bad sign. For my lions out here, what would that mean? What would that mean for us? We got to start hedging our positions. Look, no matter what they do, we're going to get it covered. It can't possibly be easier. And if you are a stacker, well, it's simple for you too. It's actually much more simple for you stackers out here. I'm a stacker, you all know that. If we see this market sell off here, or we see the market go up here, what are you going to do? You're going to continue to stack metals, although you're paying a pretty significant premium right now. That's just life in the big city. It's very hard to get this stuff. With regard to cryptocurrencies, it's the same thing. To me, you got to own them. You know that. I started talking about Bitcoin at 3,700. I told people to start buying it. At 3,700, I put a $10,000 target on Bitcoin. We're almost there. We're going to hit it, probably go past it. But again, I don't want to, I already have this, okay? If you're one of these people, give me a little time. I already have people saying, okay, Greg, it looks like we're going to hit your 10,000 target on Bitcoin. Where are we going from here? I don't even want to talk about it. I want to hit the 10,000 first. Then I will reevaluate the situation. I will put a new target on it. You don't be surprised if I tell you the target's lower. I don't know yet. I want to see where it goes. Hit my target first, reevaluate. It's very simple. All right, look, so I know this video is kind of long, but let me summarize real quick. The trend for the stock market is higher here. That's just the way it is. I know a lot of you want this market to melt down. I want it to melt down too. I want to see a real market. We can't have it. It's impossible to have a real market when you got the Federal Reserve buying it all, the Wall Street banks buying it all. Well, we are so far away from a free market or a free market economy, it's not even funny. We've gone way beyond that. We have National Socialism, the merger between corporate America and this new government that we have, a new government philosophy, funneling cash to everyone, bailing everybody out. That's it. That's what we have here in America, National Socialism. That means the market is probably going up, okay? Could it drop? Again, I said yes, but it would take a black swan event and the Fed will probably get in here and buy it all anyway. That's the trend for the stock market. You have to watch the debt market, the 10-year yield, period. That's the benchmark. I explained to you what metals are going to do. I explained to you what cryptocurrencies are more than likely going to do moving forward. I nailed it to the wall. Anyway, watch for headline news. If you notice, when the president came out Thursday and he started threatening China with regard to increasing tariffs, what did the market do? Whammo. Market sold off Thursday. He said it again on Friday. Whammo. Stocks went down. Headline news driven market. It's very sensitive to these things. Why? Because it's ridiculously valued right now. The market has no bearing on reality. It's completely distorted beyond the point of recognition. I'm talking total FUBAR. You know what FUBAR is. Anyway, all right, look. Long video. I could continue going on here, but I think I actually outlined all the very important points for you right here. If you agree, I would be very thankful to you if you would share this video, get it out there, talk about these things. I will read the comments. Let me know what you think. Look, I don't know everything. I'm sitting here outlining what I see. Maybe you see something completely different. By no means do I know everything. So collectively, we'll have a better idea as to what is going on here. And that's what matters to me. Again, we are responsible for each other. We have to look out for each other all the time. We are one family. That's what we are globally. And the sooner we get hip to that, the better off we're all going to be. Let's make it work for all of us. All right. I'm really going to end this video. It's kind of long. Love you a lot. See you in the morning. That's it.